This is Matt from InvestiQuant. Today is Monday, October 4, 2021. Friday, the markets tested down below all of the recent lows and then found some buyers to close stronger in the session. So we ended up with a fairly sizable up day, but we also made a 50-day low in the process. So what we'll be looking at this morning is what has happened historically following a 50-day low that is still above a 200-day simple moving average. So let me go ahead and set that up here and discover using all four instruments. The setup's based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading lower in the overnight session. I'm going to add that piece of information to the test by going to the opening filters, gap direction, and clicking on gap down. Next, I'm going to add that 50-day low pattern to the test by going to the price patterns, and I'm going to grab it from the active today. It comes from the new lows section, and we're going to be looking specifically at when you make a low of the day that's at a 50-day low, not necessarily closing at a 50-day low. So I'm going to go down to the very bottom option here, day after lowest low of the past 50 days. I've got that selected. Next, I'm going to go into the indicators library. I'm going to say we closed below a 10-day simple moving average, but above a 200-day simple moving average. And now I can click View Results. All right, here are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you gapped down and the prior day made the lowest low of the past 50 sessions. And this is taking place above a 200-day simple moving average, but below a 10-day simple moving average. Historically, we've only have 14 samples for the S&P dating back to 2003 for this pattern, so pretty rare. For the NASDAQ, it's 16 samples. We've got 20 in the Dow and just 12 in the Russell. The win rates on these are all in agreement that it has historically been a bit weaker. So the S&P, only 14 samples. Again, keep that in mind, small sample size. But just 29% of those 14 samples have closed above the open. The NASDAQ, 38%, the Dow, 40%, and the Russell, 33%. So all of the win rates in agreement that historically, more often than not, it has closed below the open in that scenario. If we look at the average moves, the average loss is larger than the average win in the S&P, in the Dow, and in the Russell. The NASDAQ is the only one that has a larger average win, and that looks like it's probably coming from one or two outliers there historically. So looking at this data, there's not a lot of samples to lean upon, but the majority of them have finished with a red daily candlestick. Hopefully you found that helpful. Good luck today. We'll see you next time.